Hey guys, so before I begin this video, happy Independence Day weekend to every Filipino around the world, wherever you are at June 12th, Independence Day. Hope you guys are good and well. And as you all know, Independence Day, no trading day. The next update will be, if it's June 13th today, June 15th is the opening of the market. Mary Mart will IPO by that time. I'm going to give you an update also on how that would progress. But for this video, I want to talk about what we all call silent stocks. And as to give you context, no, from the March 2020 drop, I think if I remember it properly, it was March 19 to where we are today. We're close to a quarter already from the time we saw the market started to drop massively. And that being said, there have been a lot of stocks that have moved up quite a bit already, and we are not anymore as cheap as where we were last March. We are not as cheap anymore compared to when we saw the market start to drop massively. I just want to share a couple of things. I just want to share a couple of points because there's such talk on stocks that have been, I guess, talked about as much from Ayala Corp, Ayala Land, PDO, SM Prime, or there's a lot of talk also from the ones that are pretty much in the news because of disclosures. Like you have Dito, you have the ones that FGens because of tender offers. And people always think that they have to find or buy the ones that are talked about the most. They want to buy the stock that's the most, I guess, glamorized. But what I want to show in this video that you can make money even if you're not buying stocks that are glamorized. You're not buying stocks that are heavily talked about. Because at the end of the day, if you know what you're getting into, you know certain stocks that if the fundamentals are good or the technicals tell you it's oversold, you can buy them. And that's my context for this whole silent stocks video. By the way, my name's Marvin Germo. I'm a stock market trader and investor and been doing investing for more than a decade now. And the reason why I just keep doing videos like this is I just want to keep on educating Filipinos, keep on sharing my ideas, my strategies, my principles so that uh, at the end of the day, we want to see more and more Filipinos be financially free. And regardless of the situation, regardless of where we are right now, I really believe that the stock market is still one of the best investments, one of the greatest investments that if you know what you're getting into, if you know the risk, you know the reward, you have the strategy, investing in the stock market can reap good rewards for you over the long run. It's not something that you come into without knowing what it is. It's something that you come in knowing what it is and you also study. And if you want to know more about that, appreciate it if you could subscribe and smash that bell so you get updated every time I come up with new content about investing. And like, share this video so it brings the algorithm of YouTube shows this to more and more people. That being said, let's continue with the video. I'm going to show a couple of charts also, stocks that have been regarded to be silent. But again, even in the stocks by request, it's pretty evident which companies are relatively popular. And you will also see it from their market cap. You will also see it also, those are stocks that even funds would normally touch. Those are stocks that get requested a lot from the Ayalas to SMs and Jollibees. But it's never about the popular. It's never about buying the ones that are popular, but it's about buying the ones that have buy signals based on whatever stock that you want. And as you all know, there's no one size fit all strategy. No one has the golden ticket that their buy signal, that their strategy, that their plan is the only thing that will work. Because if there's one strategy that will work in the market, then we all would be billionaires. It doesn't go that way. The way it goes is you find a strategy that fits you. The way it goes is you find something that will work for you. You find buy signals that will work, regardless if it's moving averages, MACD, ADX, RSI, Bollinger Bands, Fibonacci retracements using the Elliott wave, drawing your own support and resistance using exponential moving averages, or just primarily looking at the fundamentals from PE ratios, PB ratios, debt to equity ratio, current ratios, or looking at the EPS growth of a company. Regardless of what it is, you have to find the sweet spot from all of those parameters. It could be purely technical, it could be purely fundamental, it could be a combination of both. It could just be looking at the macro economy and buying based on the macro of how things are. But for you to be effective, and if you've seen me guest a lot of people here, you will notice that some of the styles of people, they all differ. When you saw Alvin Ang talk about these are the things that you're supposed to buy based on the economy. When you saw a fund manager saying that, hey, wait a minute, you buy later on, uh, you buy when certain items or certain disclosures have come in, or when you see financial planners guests in the vlog, they would also say you buy based on your goals, and it's not dependent on how big the drop is, but you stay the course, you stay based on your goal. Then you see a lot of valuation experts who tell you, oh, buy because the valuations are now relatively cheap. And then you see a lot of people who are focused on charts telling you, oh, you buy the reversal, you buy the bounce, you stay away from it because it's in a downtrend. As you can see, there's different ideologies, there's different techniques in the market. But what's the most important is you have to stick to your plan. You have to stay the course. You have to buy based on conviction. Never buy just because a friend bought it. Never buy just because you saw someone make money off of it. Never buy just because there's a system, a method that will help you solve all of your problems in the stock market, because what works for someone else may not work for you, but what will work for you may not work for someone else. And that's why I keep imploring this. It's not about the stock that's supposed to be bought, it's about the logic that's behind that stock purchase that's more important. You have to know your parameters on why you're buying. You have to know your list, your reasons on why you're buying that stock, because that's so important. Those it's those rules, it's those parameters that will protect you. And I've been saying this, no, don't just buy a stock just because we would talk about it here in the video. Don't just buy a stock because uh, it's something that we analyze here. I implore you to do your own diligence. I implore you to study on your own. Now, I want to show you a couple of charts. I think this is around 6 or 7 charts, or 6 or 7 stocks that have moved up, but they've been somehow, no, not really in a lot of people's radars, or if they have been, they're not the more common ones that people always talk about, or people always would ask even for stocks by request. And I believe that this the movement of these stocks mainly are isn't just because it was battered down. It's not just purely price movement, but I believe also, if you try to include the fundamentals, there are some legs into it on why it's moving up. So I want to show you a couple of things, and I hope that you guys benefit from all of this, because again, uh, that's all I wanted. That's the reason why I never get tired making videos on a daily basis. It's primarily because I just want to share and give as much information to you as possible. So number one, this is Robinson's Retail Holdings. As you can see it from the lowest point of Robinson's Retail, this is measuring it from the opening price of its lowest point. It has gone up roughly around 57 plus percent. And if you're looking for legs into this, as you all know, Robinson's Retail owns convenience stores, they own drugstores, and they also own supermarket chains. So if you've been watching the new normal videos that I've been posting, this is part of the new normal. People will probably stop traveling, but they'll buy from the hardware stores that are owned by this. They'll buy the groceries. Uh, they'll buy they'll buy the items in their supermarket, and whatever upward movement here, I believe it's something that's supported by whatever income that they could get, that they will be doing better compared to the other companies that have been massively hit financially because of this crisis, because of this lockdown. If there's one thing though, just to balance everything out for Robinson's Retail, I really believe they have a department store segment, and which is because of the GCQ, they're already open now. But the thing that people need to consider is there might not be a lot of people who'll buy leather shoes right now. There won't be a lot of people who'll buy suits, who'll buy dresses because of this. Since we're not going out as much, since there won't be any mass congregations, so you won't be really going to any parties a lot, spending will shift, and a lot of things that are not so discretionary, or a lot of things that are not so essential, might not be bought. So I like Robinson's Retail. I like its how it's connected to the new normal of how things are going. Uh, I want you to also see FB. FB is basically Pure Foods, and if you notice it, they're selling chicken, their corned beefs, their hot dogs, their bacons, all basically all of the food and beverage businesses of San Miguel is posted here. As If you remove the liquor portion, a lot of these things that they're selling are bare essentials. A lot of the things that they're selling hits different segments of society. Even their corned beef. If you try to analyze their corned beef, they have I think their Carne Norte brand, which is hitting lower segments of society. Then they have their Pure Foods, the normal corned beef, the color blue, which is relatively more expensive. Looking at it now from its lowest point, it has already gone up 65.1%. But the reason why I say it's silent, it's not talked about it. Where do you see a stock that goes up 65.1% and it's not talked about as much? So that's what I'm saying, that there are opportunities on stocks that, because they've been battered down, because they're very very low, because they're considered cheap, but because they are part of the new normal, they have gone up also. And it's not just purely speculation. It's not just really, hmm, uh, why is it going up? Is there something really going on that's pushing it to go higher? Similar to my example earlier about RHI, I believe FB is part of it as well. So if you see a prevailing theme, no, I really believe the stocks that have been silent are also run by really large companies. RHI, as you all know, Gokongwei, FB is under San Miguel. So part of the new normal. I wanna look at another stock. Comment below if you're learning and if this is something that's helping you. I want to talk about URC. URC also up 61% from the large drop. I didn't even include it from the intraday low. No, this is just it from the opening slash closing price from the March drop. It's up 61.3%. And context also, this is similar to the play for pure foods, canned goods, milk, coffee, especially coffee. No, I think their powdered coffee is something that is very very strong, great taste. If I remember it properly, it's a very very strong brand for them. And above and beyond that, it's something people can store. It's something that I believe Filipinos drink a lot of coffee. And if you're trying to look at the overall demographic, there's still a large portion of the Philippines that are really that are I would say broad, that they're not yet, they don't spend a lot of money in things that are a bit high end. But coffee, the powdered mix, is something that's affordable to a lot of people, is something that the whole 110 million population has access to and has money for it. So URC, again, something that's silent, something that has moved up massively, but it's not talked about really as much. And if you look at it and you try to zoom out, it's still from where it was before. It still has a great way off also from its highest high. So again, those are the themes: RHI, FB, URC. I'm gonna deviate from this. No, for the first three ones, I've talked about consumer stuff that people normally buy, but I want to go to the defensives also. One of the stocks that's considered defensive, you could say it's Manila Electric Company, or Meralco. This has been up also. If you measure it from the lowest point to close to the 200-day moving average, it's around 47.8%. It's steadily building also its uptrend. It's trying to break and move past the 200-day moving average. But again, this is silent. But even it being silent, it's a very, very defensive stock. I know people have stopped traveling, people have stopped eating out, but the consumption of electricity has been there. So this is not something that has gone to zero. This is not something like when you look at the malls from SM Prime to Ayala Land, their malls have been closed. They've been giving out free rent to their tenants. So that means it's lost revenue for them. But those establishments went to zero. But a lot of people have been in households. I think the commercial segment of Meralco might take a hit because, as you all know, malls have been closed. But the residential segment, I believe, will go up. I believe that it has gone up. And especially the lockdown happened during the summer. A lot of people will be using their AirPods. A lot of people who are working from home are still using and have been spending. So again, another quiet stock, another silent stock, because the name of the game is never about just finding the ones that have been glamorized, but it's about finding the ones that have legs fundamentally or have buy signals from a technical perspective. Um, Another one highly connected to Meralco is MPI. MPI is something that owns Meralco stock. It also owns it also owns Maynilad stock. But please remember, one of the reasons why it went down, and I've made so many videos about it, is primarily because of all of the news last year of Duterte not really liking Maynilad and the contracts that they're in. But because of, I think based on the latest disclosures that uh, a deal for the water concession may be in place and the government is favorable. They find the conditions a bit favorable. All of the political risk, all of the uncertainty for MPI may not be there anymore, and which is very, very good. Again, I say it's a silent stock because it's not one of your high flyers, especially when things started to drop last March. Another one is DMC. This is also connected to Maynilad. This is also connected to their housing. This is also connected to their construction. If you notice it from the lowest point, measuring it to where it is right now, it's up 32 plus percent. But the highest point that it made just a few days ago was around 43.1%. Similar to the other stocks that I've mentioned, it's not something that's very, very popular. It's not something that's talked about as much, but again, it's this one is also moving steadily and pushing towards its uptrend. DMC has construction, it has mining, it has water, and it also has property development. And just to balance things out, property development may be one of the companies that may take a hit in all of this, but uh, DMCI, looking at its other business segments, will recover once all of this is said and done. And I just wanted to say this: the fundamentals of our economy is still intact. The fundamentals of our country is still there. This is not. This is something that markets have gone down. The economy has gone down. The businesses are not so well, not because the companies are badly run. It's just because of a black swan event that people did not foresee. And once this event has been treated, once everything has been fixed, there's a cure, people find a way not to get infected as much. These companies that are good, that are fundamentally sound, will go back to the way they were operating. And as they go back to the way that they're operating, I really believe profits will also go back. The same way, I want to talk about JG Summit. JG Summit heavily connected to RRHI. JG Summit heavily connected to Robinson's Retail Holdings. Similar, no, it hit the 200-day moving average and then started to go down from that. But just measuring the downward portion of the stock to the 200-day moving average, it's up already 61.3%. If you measure it from to the closing, it's up roughly around 56% from the lowest portion. And again, as what I've been saying, this is also another one that you can list out as a quiet stock. This is something that has gone up significantly, but really, in terms of it being talked about, not as much, not much fanfare about it. So these are just some sample sizes of stocks that, if it's done right, done properly, your buy signals are there, regardless if it's fundamentals or technicals. You can make a lot of money from it. Again, I'll say this over and over: you do not need to follow what everyone else is doing to make money. You do not need to follow every bit and pieces of news, of rumors, of speculation, because you can just follow your own strategy predicated by fundamentals or technicals. And this methodology is not easy. It's not something na, eto yung stock pick, bibilin ko na lang to. It's not like that because wealth is not done that way. For those of you 115,000 subscribers, I salute you because whatever we're talking about here is not get rich quick, it's get rich right. It's you building the necessary skills for you to be able to make money. And if you come out of this strong, guess what? 1, 2, 3 years from now, you will be even stronger. As if there's one thing I know about money, if there's one thing I know about finances, it's about doing it well. Because if you do it well, you will come out and you will come out even bigger and stronger. And the strength of winning in the stock market is really, in my opinion, about building your skill, learning as much as you can, and then deploying capital for it. I think those three come hand in hand. No, you need to learn for you to earn, but you need to build that skill, and then you need to put in capital. Without those three together, it will be hard because if you're just trying to you're just trying to build a skill without any learnings, without knowing what's right or wrong, you might be building the wrong skill. Or if you're building skill and you're learning, but you're not really deploying capital for it, you're not putting as much money for it, you're not doing proper management, then it will also be all put to waste. Now, the biggest question that a lot of people may be asking is, from where we are right now, will the markets go down again? Will it be something that is the movement up something sustainable? I made several videos on that, but I also want to address it here for the people who are wanting to watch it in one go. Couple of things. Looking at the PSEI first, looking at the market as a whole, we haven't broke past yet the 200-day moving average. And for those who attended our Stock Smart sessions, you all know our style with regards to markets not really reversing it, with markets not really breaking past that yet, with markets having a bit of a bearish sentiment. So from a tech perspective, we still have to break a couple of resistance levels for us to fully reverse. We need to break past it for us to show from a technical analysis standpoint that there's really a confirmation that buyers are willing to buy it at a certain price, that buyers are more aggressive, that even if it's higher already than the March levels, even if it's higher already than where it was before, evidence of people wanting to buy it higher are surfacing. But as of this point in time, we're not yet there. So again, should the market push up? Should it try to go above and reach the 200-day moving average? Failure to break it may cause the markets to retrace, may cause the markets to contract, may cause the markets to go down. So that's one. Number two, from a fundamental standpoint, no, economy still needs to get better. We're pegged to recover better than other countries, but the fact remains that there's still a lot of things. Businesses still need to earn and go back to where it was before. The lockdown closing our economy, 90+% of the economy, will cause a lot of companies to lose income, to lose employees. A lot of them will close down. And from a global sentiment standpoint, the US economy also has to get better now. The stock market in the US has zoomed up, but it doesn't mean the economy is also zooming up. It's a chicken and egg situation that the stock market is zooming, although there are some corrections, but the economy is spiraling also. What we're seeing now is just people with a lot of loose money putting in their money in the market. And if there's one thing that's true about the stock market, when people start buying, more buyers bringing the prices up. So there's still a lot of risk out there. The economy needs to get better. The US economy also needs to get better, aside from the Philippine economy. The stock market needs to break past significant resistances. And at the end of the day, the whole fundamental reason, or the whole fundamental item that's causing this new normal to happen, there isn't a cure yet. There isn't a vaccine yet. So I think for everything to go back to the new normal, or to at least a semblance of where the economy was, for travel to continue, for tourism to flourish, for mass gatherings to be there, for events to be there, a cure, a vaccine is something that we need to watch out for at the end of the day. I've said that in several videos. Will that stop the market from going up? Not necessarily, because the market has a mind of its own. The market has a forward-looking nature to it. As long as there's optimism from buying, regardless of all this negative news, and people just keep on buying, then the market could still go up. So the question that people would ask, what if it doesn't go down anymore? Then you go back to your technicals. As you all know, the fundamentals are still there. So if when I say you follow your technicals, if the reversal will happen, we break past those 200-day moving averages, then you stay positioned in the market. If the uptrend continues to progress, I've been saying this all the time, the trend is your friend. If the trend is your friend, you just follow that to the fullest extent. If the trend is your friend, you follow that to its maximum potential. Do not be scared of holding on to a stock, even if it's up significantly. As long as the uptrend is still there, as long as the stock is still pushing up, you can hold. And I've been saying this all the time. The greatest strength that you need to deploy, aside from learning, building the skill, and putting in money, is patience. For you to experience gains, I'm not just talking about something that will make you a living. I'm talking about something that can create wealth for you for a very, very long time. One of the key ingredients, one of the key skills that you need to develop is patience. That if there's nothing, there's no sell signal that's coming out, you hold on. You don't do anything. You you stick to your plan. If you don't need to log in, then don't log in at all. Don't transact at all. You do what will work for you. You hold on to your position. You come out to sell when a reversal starts to unleash itself, or it starts to surface, and that's the only time you sell. But until that time happens, should the market continue to go up, you just hold and you don't do anything. So there, I hope you guys got a lot from this. Links are down below to my books, 5 books that are available via Shopee, uh, to my online courses with Chinkee Tan called Stock Market for Everyone, to my other online course with Sean Si, it's called Make Money, Grow Money. Link is down below. Then to Stock Smarts Manila, link is down below as well. And then what else? NordVPN, all of the other things that you want to participate in. I have links below. You can just click them. And then yun. I hope you guys got a lot from this. If this is something that's helping you, appreciate it if you could share it to people. Appreciate it if you could like. Appreciate it if you could comment. If you guys have any questions, put them in the comments section. And we're at the 26-minute mark. If you stayed up until this portion, comment I stayed, comment I'm learning, comment this is something that's helpful. And I'm just gonna continue to make more videos like this, no. And what's so interesting is I never thought that I'd do as much video, especially the lockdown is almost over. We might go back also, you might see more people going out. But I don't know, I'm enjoying this. I'm just enjoying sharing my thoughts and my ideas to all of you, and I'll never stop. Uh, so that's it for now. I hope you guys got a lot. This is Marvin Gurmo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.